Hey, Mike, thanks for coming back up. Jim, you're in second place, round two. Apologize for the issue. Something happened with Zoom. We're waiting for Dimitri to come on. Give us a second. Actually, Zoom just dropped this, Mike. We'll see if the doctor comes back. Mike, how'd you see that we came back up? Was it YouTube that alerted you, or was it I just sent out an email too?
Recording in.
D, you there?
Hey, Will, how's it going?
Hey, sorry about that. That's the first time that has ever happened. For some reason, the whole Zoom just dropped us, so I had to quickly recreate a Zoom and send it out. We do have Mike, Jim came back on, Andy. We'll see. I did get an email off, so let's try to start where you finished up.
Okay. Let me take a look at the screen. So, hold on a second.
Hey, D, I think we lost your camera. And you're on mute. All right, perfect.
Yep. So I guess really quickly, because we don't have that much time left, but one of the things I wanted to show you guys is that, when you're looking at a stock, trying to get a valuation, what comes into play is what we know markets really reward are growth and management, like the execution of the business model. And to do that, I'll show you really quickly here a comparison. So here's a comparison. And Intel, one of their competitors, I think is AMD in the chip. And here you can take a look at that. If we open up here, down 11%, down 10%, the market cap of Intel and AMD are basically similar, right? So you're talking about AMD, Intel, similar market cap. But look at how much more in sales Intel makes, 77 billion versus 19 billion, right? And this shows you how much reward the market gives to a company that can execute, right, on their revenue growth. So here, year-over-year revenue growth, AMD 65%, Intel is basically declining. So even though AMD has much less in sales, their market cap is already at the same price as Intel. And that's all due because of the way management is executing and their growth rate, right? That's the big difference. And if you want to take a look at, let me just see, if you want to, when you're building out a valuation model, besides spitting out a price, because we could go in there and calculate fair value for Intel. And here, I think I got caught off while I was doing it. So we see here Intel here giving us negative guidance. This is what they're providing us, that for the third quarter, gross margins 46.5%, earnings per share, they're estimating it at 35 cents. That's an 80% decrease from the prior year. And the revenue, they're giving us guidance of between 15 and 16 billion. That's a 19% decrease. So that's a 20% decrease almost from the prior year. So now they're telling us, negative growth. And when you're doing that, it's very hard to put a valuation on a company that's just, declining, such a fast rate. Maybe it should be at book value or even below book value. But let's just give it some assumptions to spit out a number. right? And I'm going to give it some bad assumptions here. The first one we need to give it is, what do we think their profit margins are going to be? How much are they going to keep for every dollar in sale? And historically, you see Intel, it's about 30% operating margin. But let's just give it a 17%. You know what? Let's even give it a 15%. So let's say it's a 15% margin. It just falls to the S&P 500. Even though it isn't a high margin business, let's say it goes down to 15%. Revenue, that's very hard to really forecast because their guidance, they keep guidance lower, that their revenue is declining. But let's just say that it does decline, and then in the next 5 years they get it back to where it is, maybe flatline over a 5-year period. Okay, so just let's give them that 0% revenue growth over year over year in the next 5 years, 15% profit margin. If we plug that into our calculator and give it an implied value, we're around $34.64. So you could see that's where it's going around $34.64. And at $35, we took a look at it. That's about, their tangible book value is around $17. So, halfway there. And you could see prior to today, they're trading 1.6 times book value. So they're coming closer, just declining towards their book value at this point. But it's not just the numbers, right? When you're doing a model, when you're developing a pricing model or valuation model, some of the things you want to look at is competition, right? Are you losing your competitive advantage? How is your competition doing relative to you? And that's what we just saw that in AMD, they're growing pretty quickly. Then you want to take a look at your risk factors and how's management performing. And to do that, one place you could start it out making your notes is you could go to the SEC filings. These are their quarterly and annual reports. And here we have annual and quarterly reports. And a lot of it will be in the annual report. So the annual report gives you a lot more information. So clicking on here, 10K, that's your annual report. Right, bring that up, and then you could start plugging out risk factors, competition. So just to make it quick, we only have a couple minutes. I'm going to bring up, competition. Here they'll talk about products, competition. We operate in a competitive market. We compete with AMD and vendors. So you want to write all those out for yourself. So you have kind of maybe an infograph, or this way you could, while you're doing your evaluation, you could start looking at who are their competitors? What are the competitors doing? How are the competitors growing, declining? So competition, very important. You could also look at other risk factors and start making notes, supply chain, other risk factors like litigation. They'll talk about maybe their input prices, labor, all this. They should give you very good clues what you should be looking at as far as potentially projecting their revenue. So just wanted to kind of go over a couple things. We could see that even though sometimes a stock could look like it's valued really, cheaply, there's a premium that the market gives to management when they're executing well and growing, like Amazon. And there'll be a discount to management that is perceived as not executing well on the business side of things. Places to check for things, go to the SEC website, open up those annual reports, start making notes of who their competitors are, what are the risk factors that you should be looking at in your overall assessment of that company.
Well, great job, Dima. Hey, everyone, thanks for coming back on. I mean, we did get almost half the people back on. I have to send an apology to Chuck because he tried to get back on and couldn't find the link. But you did a great job coming back, D. We appreciate that.
Awesome. Thanks, Will. Thanks, everyone, for joining. Stay safe out there. Have a great trading day. Hope to see you guys Monday.
All right, Trade and Peace community. We will see you Monday. And I did put a link, and I will send out an email to everyone. We're having Jake on next Tuesday at 3. He's also going to be doing evaluation analysis and using the tools the way he does. So that's going to be really cool. Thanks, D.